Hey friends, welcome back. Today I brought in Jakob Dwyer. Jakob is our Chief Financial Officer from Real Joy Vacations, and what we're trying to do here is we're going to teach a module on how we account for the vacation rental industry, how we do forecasting, unit growth. So this is obviously a hot topic amongst our audience.
We have to know how much each client cost us to acquire. If it costs us $5,000 to attain a client and our management commissions and fees are going to be $5,000,
is it worth it?
Is it worth it, right? Are we just spinning our wheels? So the problem with inventory in the vacation rental industry is you typically have somebody that is a lower paid employee or the business owner running out to stores frantically buying stuff.
In the middle of the day.
In the middle of the day.
Yeah.
So that's the problem. The solution is forward thinking, being ahead of it. We prefer just-in-time inventory system.
Yeah.
So it means that if you order air filter, it's going to come just in time for when it runs out.
Jakob and I are going to cover a use case for vehicles, and the use case is, do we lease them from somebody like Enterprise or another leasing company, or do we lease them from our employees?
We currently use the equity lease method, and we use Enterprise Fleet Management. Previously, we were leasing vehicles from our employees at 54.5 cents a mile. Right now, our cost per mile is about 37 cents.
Cool. We're going to mine into Jakob's brain. We're going to learn about how we're going to look and view accounting in this industry today and going forward, so that you have something that's simple, that you can latch onto. You're not trying to figure this out, because I promise you it's a mess. So stick with us. We'll see you in the lessons.